First of all, let me start by saying that Nigeria is presently evolving and undergoing through a serious digital revolution never seen before in any country for several years. And if we look at the present condition in Nigeria with regard to information and communications technology, as just recent as only 10 years ago, there were no GSM mobile phone in Nigeria at all. In fact, the largest mobile phone operator just recently celebrated its 10th year anniversary, which also meant that before the advent of mobile phone, the tele-density was ridiculously very low, 0.04%, which meant one mobile phone to about 250 persons. But today, it's a completely different ballgame. We have total connected lines of mobile phones of 90 million of a population of just about 140, 150 million people, tele-density of about 65%. So that kind of massive growth, you now realize that we have more mobile phone users in Nigeria than the entire population of United Kingdom, or more mobile phone users than even the entire population of France or Spain. This is huge amount of transaction that pass through that. If we're then to introduce commerce, commercial activities, and payment system through that same channel. Now, the creation of the fact that there is a convergence of communication as well as payment system, which means the banks. When the banks have to now interface with the mobile companies, then that convergence alone on its own will bring about a huge amount of commercial activities that will interplay. And how will this work? In Nigeria, we have very strict regulatory rules. In fact, the fact that the channels of distributions lie with the MNO, the mobile network operators, does not necessarily give them the right or the privilege or the, if you will, the license to start operating a payment system as had been successful in Kenya. The Kenya model, as it now works, will not even work in Nigeria because you have to be licensed to deal or transfer money. You have to be a bank. If you are not a bank, you have to be a financial institution. Either you are a cooperative bank, a mortgage bank, as the case may be. You have to have a proper bank account. The KYC is a very strict requirement in Nigeria. Central bank is a very, very strict institution, government institution that ensures that any form of money transfer must be regulated. And I think that's the best way to go about it. That's why the Kenya model will not immediately take off in Nigeria until the necessary regulatory and, of course, the legal framework is put in place. Currently, Central Bank of Nigeria have licensed a number of financial institutions as well as some consortia to deploy mobile payment system. And how will this work in Nigeria? You beginning to also realize that we have thousands of points of sales terminal, POS, and the mode and method of payment system in Nigeria. From day one, many Nigerian banks had already been experiencing what we call online real-time system of payment. So even as remote village as you have it, even if you don't have a branch of a bank there, you are likely to have a community bank or a mortgage bank or other financial institutions who will play the role of a bank in terms of not just transferring money from one point A to point B as it is in Kenya or in M-Pesa model, but what the masses do require is not just to receive payment of money being transferred from one point to the other. That is being taken care of, and more of that will also be taken care of with more deployment of technology. The small savers, the small peasant farmers, the traders, they want value added, not just receiving a mobile phone and enabling some payment system. Value added such as savings account or loans, small amount of loans. That has to be the value added that is lacking in M-Pesa. And maybe M-Pesa is thinking about including some value added services of a bank. Otherwise, the M-Pesa model, it may have worked so well on the short run. On the long run, they need to evolve in terms of introducing some sustainable strategic models. The present model will work, but in Nigeria, it hasn't really, in a very informal setting in Nigeria, a number of transactions have been done from the city to the villages or to various communities in terms of taxing, if you will, some airtime. And this airtime are converted to cash almost immediately. That's been done over the years. But the difference between that and M-Pesa is M-Pesa had been branded. M-Pesa has a brand and owned or grandfathered by a major mobile telecommunications, Safaricom. So it's been branded, and therefore it has gotten world or international recognition and acceptability. Whereas the informalized ways of doing the same thing in Nigeria had not been branded, so there's really no ownership to it. But for the very first time, Central Bank having licensed mobile telecom operators as well as banks to own mobile banking operations, we're beginning to see a completely radical revolution in terms of mobile payment in Nigeria, which will, given the population of Nigeria, 150 million people, and approximately about 22 bank accounts, 22 adults have bank accounts. We need about, out of 70 million adults, probably there's also room for 48 million bank accounts to be opened. And this is what the mobile telecom operators and as well as banks and financial institutions and other consortia that will embrace mobile payment system. Those are the ones that they should target, about 48 million adults that probably don't have bank accounts in Nigeria today. Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.